So backtesting is like the best way to, the best way to, it's the best way to master a strategy because you're not risking real money and you get to see like what actually happened. And backtesting is not just about going on the chart and marking it up, but it's also about jotting it down and making it very plain and clear how much you would have made if you had done so and so, right? So that's what I'm very disciplined about that. Let me open up the Excel. So what I did was that I created a Excel sheet and a PowerPoint to kind of record like the success rate. And so I've only done 2 currency pairs for the past, my goal is by the end of this week to have done about 6 to 7 currency pairs and backtest them for 2 weeks. It's gonna take me at least 15 hours to do it this week. But you know, like if I'm only trading for 2.5-hour windows, which is the strategy, then I have the rest of the day to backtest. So let me see if I can share this Excel. Everybody can hear me fine, right?
Yeah.
Yeah.
Sorry, X. What's your name actually again? I always refer to you as X. Hello? Okay, maybe later. All right, so this is the Excel sheet. Can everybody see this Excel?
Yeah.
All right, dope. Take that as yes. So my plan is to backtest all these currency pairs right here: USD CAD, AUDUSD, GBU, yeah, et cetera, et cetera. So I've done UCAD and I've done GU for the past 2 weeks, from 26th all the way to the 15th. That's about 10 trading days. And so my final results is that if I had started the strategy on UCAD in the past 2 weeks, I would have made anywhere from 10 to 20%. GU, depending on how much you risk, you would have made anywhere from 30 to 100%, assuming you had done this properly, right? Now, you know, I took the courtesy of watching. So first of all, disclaimer, especially because this is going to go on YouTube, like I did not come up with this strategy. It was started by Inner Circle Trader. Check them out on YouTube. He did a whole 20 video series on this. And it is by far the most accurate trading strategy I've ever seen. And really glad I had time to backtest it. But just simply on GU, so I created a score. So this is the final score. This had a score of 9 versus 6.8. And how I made points was that the full TP was reached. If you had a score of 1, then you had a full TP. Full take profit reached, right? If you can mute ourselves, guys. Okay. All right. So how this works is that you know, I have a final score here, and how I allotted points on GU was that if you got a score of 1, then full take profit was hit on the trade. Negative 0.2 means I was stopped out. The reason why it's negative 0.2 is because you have to think about how I'm using risk to reward. So the risk to reward is usually like a 1 to 5 or 1 to 6, right? So if it's assuming it's a 1 to 5, right, and I've made a full TP of 1. So let's say if it's 1 to 5, it means that if I risk 1%, I'm going to make 5%, right? And the math to explain this is kind of difficult. I don't know how to say it, you know, in a way that would make a lot of sense. But basically, the negative 0.2 is supposed to underweight the loss I'm making. So, you know, it shows the ratio between, so a negative 0.2 to 1 is basically negative 1 to 5, right? So negative 1, I would lose 1%, but if it went my way, I would have made 5%, right? So negative 0.2 to 1 is the same thing as negative 1 to 5. So like negative 1 stands for I would have lost 1%, but 5 stands for I could have made 5%. That kind of makes sense, right? So that's how I weighted it. And so 1, it means I made the full take profit. Negative 2 means I was stopped out. 0.5 means I got a partial. And 0 is break even. So I didn't lose anything. 0.5, it means I got partial. So I made like anywhere from 30 to 50% of what I would have made if it had reached the full thing. And so I backtested on GU. And surprisingly, in the past 2 weeks, if I had done the strategy and I did it right, I wouldn't have lost any money. If anything, it would have hit strategy and it would have broke even. Now, I'm not going to say that you won't lose money. You're going to lose money in the market one day. This just happens to be the past 2 weeks, right? And if, you know, if possible, maybe if I have more time in the future, I'll probably backtest this, you know, maybe a month, a full month or a full 2 months if I just have enough time, right? But in the past 2 weeks, I didn't lose once, right? In fact, some days I got 1.5s and a 2, which means I got 2 entries that hit my full take profits. That means full 1 to 5, full 1 to 6 trade, or it could have been even a 1 to 7 or 1 to 4. It doesn't matter what it was, but the full take profit was hit on 2 entries that happened within the same time frame, right? You know, I didn't hit anything on Friday. I wouldn't have gotten in the trade. Actually, I'm going to show you on the PowerPoint. The trade on Friday actually was a fire 1 to 6, but because it didn't hit within the window of time, I actually didn't end up getting in the trade. So Thursday would have hit a partial. Wednesday would have hit a full take profit plus a second entry that would have hit partials only. Then, you know, Tuesday full take profit. Monday full take profit. Friday full take profit, and so on and so forth, right? And so we got a total score of 9. And it's not 9 out of 10 or anything. It's just total score of 9, just adding these up. And so I'm going to do it for all of these throughout the week, and I'll let you guys know which pairs are probably the best for OTE. But there's nothing stopping you from trading all of these, honestly. Like, you know, it's honestly so tempting to just like, you know, like if you can make, even on UCAD, I would have been profitable because it still had a score above 0. So I would have been profitable if I traded on UCAD. So what if I traded on UCAD and GU? What if all these are all profitable and I get entries almost every day? I mean, that's what I'm saying, that the potential of this trading strategy is honestly scary to me because I just don't, it's uncomfortable. I feel like I'm cheating. I feel like something is like, it can't be right. Like it's honestly it's too scary accurate. And so that's why I want to try it on my real live account and see what are real life results like. But the back testing it's insane. And so right now I'm going to start showing my PowerPoint and showing you what the trades look like. But after I show you the PowerPoint, I'm actually going to explain how the strategy works. And I'm going to do it in real life. And so on GU, back testing, so this is June 26th. This is Friday. So the whole premise of the strategy is that you have to get in between NY session. So that's 8:30 a.m. to 11 a.m. Eastern Standard Time. So that's what these red vertical lines are right here. I don't know if you can see I need to annotate. So I don't know if you can see my mouse, but okay.
Wait, what's your time zone again?
So you have to enter anytime between 8:30 a.m. to 11 a.m. Eastern Standard Time. And those of you who are in Billionaire Nation, like you'll be trading with me on live Zoom. So like you don't have to worry about, you know, specifics right now because I'll be going over all of this again. But so this is what these vertical lines stand for. This is the time period between 8:30 a.m. and 11 a.m. Eastern Standard Time. As far as the entry goes, I won't explain this just yet. I'll explain it when I get on the actual charts. But what's happening is that, you see, the reason why I didn't enter is because the candle that was supposed to come into into the entry point here, it happened before 8:30 a.m. So I didn't enter, but it would have been a 1 to 6 trade, right? Straight up. And I could have held the running position. So I didn't even have to take everything out. I could have held the running position until I saw a real reversal. But I mean, you know, I think from now on I'm just gonna be fine. If I get a 1 to 6, like I'm not gonna be selfish. Like I'm just gonna pull out. Like, you know, there's gonna be another trade tomorrow. The one after that will, you know what I'm saying? So, that's June 26th. The reason why I have the daily chart is because the analysis starts from the daily, then you go into the 5-minute. I'll explain how all that works. But you know, I was targeting below this recent low, which is retail resistance, and you see we actually broke past that, and that's what this trade was. The next day on the 25th, also successful. Your first entry would have made a 1 to 3 right here before we actually ended up, you know, breaking even. So you would have at least caught a 1 to 3. I think this was the first entry actually. This was the first entry right here, which would have caught you a 1 to 3, and then this is the second entry, which would have hit your stop loss, but I probably wouldn't have gone into it at all because I already would have achieved the 1 to 3 here, and I saw clear signs of maybe a potential reversal to the upside. But because you hit a 1 to 3, I mean, even if you take another hit, like, I mean, you still made a 1 to 2 on the day. On June 24th, also successful. Our entry, I think this is our first entry right here. That would have been I actually don't remember what this was, but I'm pretty sure it's a 1 to 5. It looks like a 1 to 4, 1 to 5. Full TP hit later on. You don't have to actually, you can stay in the trade all day. Like you just keep adjusting your stop loss further and further into profit. I'll teach you how to do that too. I'm not entirely clear or entirely sure on how to do it just yet, but I can teach you what I know so far. Your second entry would have been around here. And so you would have gotten in again. And you would have gotten a nice, I think 1 to 3 again. So that would have been another one. So this is a 1 to 4, 1 to 5 here, and another 1 to 3. June 23rd, saw some success again happen within the NY session right here. Another entry. I believe the full take profit was hit. Yeah, full take profit was hit. A 1 to 6 trade. And this is what? This is 3 days in a row. I mean, you've made 18%, 20% of your account. Assuming you didn't take out partials. So if you took out partials, that's why I adjusted. So it's like maybe 10% to 18%, depending on where you take partials. June 22nd, successful. I'm not going to explain but I'm just going to tell you that it was a successful 1 to 5 trade on June 22nd. The next Friday, or the Friday before that, also successful. 18th, successful. Partials, this was also successful with partials on June 17th. Successful on the 16th. Successful on the 15th. I mean, 2 weeks in a row, we would not have made a single loss. And maybe I'm I don't know. Maybe I am exaggerating, whatever it is. But based on what I've been taught and how to enter, I would not have been stopped out if everything had gone according to plan. And so I'm gonna go onto the chart now. I'm gonna explain basically how the strategy works. So Inner Circle Trader, what he teaches in OTE is 2 things. One is about the retracement. You want to look at structure. One thing I learned very well from Aerial FX is paying attention to structure. So if you can combine structure and strategies together, like OTE, then you're golden, which is what really allowed me to make a lot of money on those back testing, right? So you want to look at structure. You want to look at the retracement, and it needs to be trading in between 8:30 a.m. to 11 a.m. Eastern Standard Time, New York session. Also, if you have any questions, feel free to butt in at any time. How it works first is that, I like to do higher analysis, but it's not really that important. It just helps you with confluence. We can see that we had this big sell-off, sell to buy, which took out these lows and started going higher. We had a little bit of retracement until we finally came back into this imbalance and this order block right here, above these equal highs on the daily time frame. We got above these daily highs, right? And we filled in this imbalance and came into that weekly order block and started falling again. So I had a bearish sentiment. On this trade. Also, after we took out these equal highs, next order block we would target is like right here. This order block in here, right? And this is what we call a bullish order block. It's kind of like what an order block really is just like, to sell to buy amongst, price action. And so, price should be going up. But what was this cheeky sell candle doing in here? It's just banks trying to get at a cheaper price so they can buy cheaper and keep moving up, right? And we see that this order block actually came into this set of sell to buys, right? And then this sell to buy came into this sell to buy. So it's nice bullish structure, right? And so we're expecting we're expecting that this is going to be a magnet for this, right? Can you guys see my mouse moving around? Can somebody unmute themselves? Tell me, can you see my mouse moving around?
Yeah.
Okay. Yeah, you're good.
You're good. Let me just put on my spotlight. And so on top of that, I was expecting price to come into here, right? So for a very long time, I had a very bearish sentiment. But also what I figured was that that isn't, honestly, like your long-term direction, it helps, but honestly, you can still trade without having an idea of where it's going to go. I mean, the probability is less likely that you'll end up winning, but it's not to say that it's still not a good opportunity for you to enter. Just because you have to watch. So what happens is you go on the daily and you look for where you think price is going to go on the daily. Let's say for the 26th, I was looking for, what you're looking for is on the daily charts, the previous day low or previous day high to get taken out, right? So this is the 26th and this is the 25th, right? And I'm marking up now the previous day low and previous day high of the 25th. So on the morning of the 26th, I'm either looking for the previous day low to get taken out or the previous day high to get taken out, right? And so because I knew, or I assumed we were going to come back into this order block, because we hadn't actually really come into it here. We hadn't really come into the open of it. So I was expecting price to maybe, do something like this, bounce up to this bearish trend line structure, and then finally come into this order block, which is what happened. And so on the morning of the 26th, when we're up here somewhere, I'm expecting price to take out this previous day low. Now, if it had taken out this previous day high, it doesn't mean that we couldn't have gotten a buy just because I was expecting this to happen, expecting price to come into here. I'll kind of explain that later, because you see some entries that happened in here, and I was still expecting price to come into here. And so you do your top-down analysis first. So you see the daily, you have your overall bias. I think price might come into the previous day low. Then you go straight into the 5-minute chart. Straight into the 5-minute chart. Okay. Now, this is the previous day high. This is the previous day low. All right, we can even mark that up. So just keep it in mind. So PVD high stands for previous day, and just copy and paste that. Right here is the previous day low. Okay. Now the next thing I do, right? When Inner Circle Trader talks about OTE, he does a lot of quarter theory and thinking about whole levels and all that. I mean, I don't really pay that much attention to it. I've seen that I don't really need that in order to trade this strategy. It helps, but I've not really been using it, right? So I take the vertical line and I set my entry zone, the times in which I would look to enter, for 8:30, right, to 11 a.m. I'm just gonna adjust that so it goes to 11 a.m. Right, to 11 a.m. So you're looking to enter anywhere between here and here. And so you look at structure, you watch structure now. So I had the bias that previous day low was going to get taken out. And it actually did. Previous day low got taken out. This should have been our target. And it actually got taken out before we entered into the session, right? But that doesn't mean price can't fall lower, because remember, we were still thinking about that order block that needed to get taken out or that needed to get mitigated, right? And so I was thinking price can still go a lot lower into that order block, which is somewhere around here, I believe. Yeah, somewhere around this area is where the order block was over to the left was really filled, or at least came to the open of it for rejecting. And so what you do is you look for structure, you take your fib, do something like this. Draw from the recent high to the recent low. Right? And you're going to enter at the, so I'm actually gonna do this. I'm gonna click this. Settings. So you have the 62%, 70.5%, and 79%, right? Those are the relevant levels, right? And then you have obviously the full retracement at the 1, which is this. You set your entry, let's say I draw another horizontal line, or I'm gonna draw a trend line. Your entry is gonna be at the 62 level. Let me draw this out a little bit more. Your entry is going to be at the 62 level. Okay. And you're looking for shorts because there's bearish structure, right? What you do is you keep your stop loss above, especially for GU, I like to keep it a little bit above the 1, right? So let's say we had an 8 pip stop loss, 8 pips. Make it a whole number. 8 pip stop loss, or 80 pipettes for short, or for long, actually. And what you're doing is once you enter from the 62, your target overall is going to be the negative 2 retracement. That's 2 standard deviations away. That's a 1 to 5.36 risk to reward ratio. Right? However, the key to this is your entry needs to be between 8:30 to 11. And as you can see, our entry would have been triggered at 8:25. And that is 5 minutes before. We have to stay disciplined. You know what I'm saying? You would have been so upset at yourself if you got in at 8:25 and it just kept going up because you didn't follow the rule. It needs to be at least at 8:30. You could say it hovered around and started falling. If you wanted to be risky, if you saw this happen and saw it start falling, especially with the bearish sentiment and you see overall bearish structure, you could have entered from here. At 8:30, you saw the candle was still a little bit above the 62, so you actually would have gotten an even better risk to reward ratio because your stop loss would have been like maybe 4 pips then, right? And then start selling off into the NY session, right? I think other things you also want to be, you also want to be cognizant of what's happening on the left, right, over here when you're entering, right? Price dipped below this past low. The full body, right? We formed a little bit of equal lows right here. So we expect that to be taken out. Even if price goes back up, we expect these equal lows to be taken out. And we also came into this really bullish price action. We went past down this past low, which means that this is a lower low, right? This is a lower low, creating a higher low, which entered into this bullish action and then sold off. And so what you're looking for, you're just looking for really recent, more smaller time frame structure that you can take the entry off of, right? Now that's a little confusing, maybe, like exactly where to enter, but that's why we're gonna do several examples. Are there any questions so far? Okay, so that was the 26th. That was the 26th entry. Unfortunately, I probably would not have entered that. But all right. So let's say it was the 25th. Let's say that this candle didn't exist. So let's draw a box over this. Okay, that's not really possible. Let's just say this candle didn't exist. And it is now the 25th. We saw that price came up onto this trend line and rejected heavy. And we still have this order block here. And another thing I want to talk about is when you see this last low right here, you see a rejection off that level. Retailers think that this is now a resistance level, an area of resistance, right? Or sorry, an area of support, my bad. Where if price comes down here again, they're thinking that price is probably going to reject again, right? So they'll probably place a position like this, where you enter there, because price rejected off so strongly from that area, they set their stops somewhere around there, maybe a little lower. And say finally we can get more push, right? But what happens is that when you take out this retail low, right, you have just hit their stop loss. And when you hit the stop loss of a buy stop, or a buy limit, sorry, you're forcing them to sell back their position. Sorry. You're forcing them, am I getting confused right now? So you have a buy limit, you have a stop loss. Yeah, you're forcing them to sell back. Are they buying back? Dude, this thing confuses me sometimes. When you hit the stop loss, I'm having a brain fart right now. Hit the stop loss of a buy limit. So you have a buy limit, you're forced to buy, forced to sell their position, which gives them liquidity to buy. Okay, yeah, okay, thank you. Yes. So when you hit the stop loss of a buy limit, right, you're forcing them to sell back the position they just bought, right? And when they sell back their position, it now gives them room to buy, right? Because you need someone to sell to you if you want to buy. And so they capture that liquidity below here so that now you could potentially see price rise. But there's no telling. Price can continue to fall, maybe capture a lot more sell orders below this low, and then finally maybe see a retracement for a buy, right? All we know though is that these are magnets, right? So right here, this would have been a magnet too. This will also be a magnet where price is going to be magnetized downwards from up here. Price is going to be magnetized downwards because there's liquidity resting under this candle, right? This area of support. And so also we have bearish structure. So I was expecting this level to get taken out anyway. So we're looking at this. This is going to get taken out eventually. We're looking at this to get filled eventually. So let's say we're now on the 25th and we're looking to take out the low of the 24th, right? Well, let's just draw a high anyway because you never know what could happen. The high could also get taken out, right? And so what would happen, so you have the high and low of the 24th and you're looking for an entry on the 25th. Go into the 5 minute. Well, let's actually delete this. I don't know what's up in that chart. I'll really refresh the page. The market's just open, yeah. All this stuff that we do. Okay. All right. So daily high, daily low of the 24th. Going to the 5th, going to the 5 minute. Go all the way back. Oh, let's delete this. Go all the way back to, right? Okay, so up here is the high of the 24th, right? And the low of the 24th. Remember, we're looking for the low to get taken out. Okay? And so what we do is that on the 25th, draw your vertical lines, 8:30. Then send another one to 11. Okay? You're gonna look for an entry in, now this was the previous day low, right? This was the previous day low. It already got taken out. However, we had some relatively equal lows here. And we had more bearish structure forming. And we also have a very bearish sentiment, right? A very bearish sentiment, okay? And so now what we do is we look for entries here in the New York session. So we're seeing bearish price action happening. We took out these highs over here. And price is now falling, made a new lower low here. So what I'm expecting is price, to continue to fall. Now, more realistically, here's what may have happened. I might have drawn my first fib from here to here. I would have been stopped out. However, the entry would have happened at 825. So I actually wouldn't have gone in there. More so though, this is a more valid one right here. Because that's within the session, right? So you draw from the most recent high, recent low in the structure, retraced, hit the 62 level, never came back up above here, which is where we kept our stop loss. Put a position here. Around a 10 pip stop loss, most likely. And you aim for the -2, which is all the way down there. Right? Assume it's all the way down there. Now we would have gotten in, would have been in profit. This is probably around a 1 to 3 by now. We would have achieved the 1 to 3. However, if we set our stop loss to break even, we would have been broken even. But the real question is, where do you take partials now? So this is how it works. All right, I'm going to remove this. You want to pay the trader, right? When you're trading this. So let's move this away from here because candles are making it a little blurry. All right, let's just go over here. All right, let's say you enter the 62 level. You keep your stop above here, and you're waiting for price to fall back down. Once you started heading down and you're in profit, you head to the 0 level, you move your stop loss to break even. That's the rule. Once you hit 0, move your stop loss back to break even. Don't let a winning trade turn into a losing trade, right? Hits to -0.5, take your first partial, right? And move your stop loss a little, scale your stop loss in a little bit more into profit. And in this case, I would have kept it, anyway, I'll explain that a little later actually. And then once you hit the -1, take another partial, scale it a little bit more into profit, right? If there's an opportunity for you to do so, right? Hit the -1.5, take another partial. If you like, I usually don't. I wouldn't take a partial out of -1.5. That's just a number that I like to look at. If I see a heavy reversal, I may take out the whole thing just because it's so close to -2. But you don't have to take out partials at -1.5. It's not a rule. It's just something that you could do if you want to be safe. But then usually once we're past the -1 level, I'd like to let the position run to -2. And if it gets a little bit down here and reverses, then at least my stop loss would have been somewhere here or here and profit, right? I would have already achieved the 1 to 3, and I would have maybe got stopped out around here on break even and profit, right? But the final target is -2, where you would have reached the full trade. So let's see how that would have worked out here. All right, so let's say we got in here. And it's okay if you get stopped out on your first entry. Just look for a second one, right? Because there were like 3. So let's say you took it off this one, got stopped out, but then took it off this one, right? Achieved the 1 to 3. What would have happened is, let's say once we got the entry here, we hit all the way past the 0, I would have set stop loss to break even. -0.5, take out first partial. -1, take out second partial. And my stop would have been somewhere here. By then, I would have moved my stop to somewhere above this last structure right here. Well, actually, no, that's not what would have happened. I would have actually kept it at break even, most likely. Because I would have seen, which is something I also put in the PowerPoint, just for the sake of this call, I just didn't see it right now, is that this is actually a second entry right here. So from this recent high, this bottom, we're tracing the 62 level. Keep our stop loss above here. Let it ride, right? Somewhere around here, unfortunately, we may have been stopped out in the end, but we've already achieved the 1 to 3, so we would have maybe a 1 to 2, because it never reached the 0 level, so we wouldn't have moved to break even. But this is a second entry, and so our first entry probably would have got stopped out. we would break even around up here. But we've already achieved the 1 to 3. Then the second entry would have been stopped out. And so, you know, maybe going forth, I'll probably only get in off the first entry, especially if it's in profit. I may not try and get 2 entries unless I've had a really good week and I can risk some more. But you can see that would have been a profitable day for you. May not been the best day, may not have achieved full target, but it would have been a really good day, right? Let's say we were here. So this is the next day's previous day low, previous day high. This is 23rd, and we're on the 24th. We have less than a minute. I'm gonna end this Zoom, and I'm gonna send another link.